Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, we have had 3-day rally and big rally actually after a big decline previously. The SGX Nifty, for whatever it's worth, is indicating a 20-point downtick. Let's see if that is actually the actual start. Ashwani Gujral, Sudarshan Sukhani and Mitesh Thakkar with us. Good morning. Ashwani, what's the trade today? The instinct would be to buy the dips. If there is a dip, would you buy it?
Good morning, Anuj. Today you may have to play sweep and reverse sweep. So you have to play on both sides because there is one part of the market which is always on the downside, another part is on the upside. So IT and banks, maybe for the day, even banking could have a soft start. So basically, if we get Nifty, say around 10,640, we try to buy it. But again, back towards the high point of yesterday, 10,710 thereabouts, that's where you try to sell it. Similarly, Bank Nifty, if in the morning we again go back to retest yesterday's highs, that would be a point where you would like to see if the market shows you weakness. And similarly, closer to say 26,300 thereabouts, you should try to buy it if you get that far.
Okay. Good morning, Sudarshan. Which way would you tilt?
Yeah, good morning. Well, Lata, today is a different day. We've had 3 days of strong rallies. I think the rally is likely to pause and decide whether it wants to go up, whether this was a corrective rally. So today the view is that the Nifty is actually an intraday short sell. We wait for either a small surge towards 10,680, 690, that area, and then short it, or wait for a consolidation. The market just goes nowhere for 1 hour. If it breaks down from the consolidation, then we again go and short it. So there are 2 shorting opportunities on only intraday with a possible target of 10,600, 610.
Okay. Mitesh Thakkar is also with us. Mitesh, after this 3-day move that we've seen, do you reckon that there could be more upsides?
Yeah, good morning. So I think, basically getting past this 10,620, 630 was a good move. While we could have a 1 day or maybe, few hours of pullback, I think as long as we don't break this 10,630, 10,610 zone broadly, give and take a few points, I think I should believe that the markets will be biased on the upside and we could have a target closer to about 10,800. So I think in that sense, I would agree with Ashwani. I think buying closer to about 10,640, 650 would be very ideal. Keep a stop below 10,610. And maybe after a day or two of consolidation or some subduedness or some intraday profit booking, I think the index should possibly head higher. So in that sense, we'll trade with more of positive bias and try to buy it closer to about 10,650, 640 zone.
Let's discuss individual stocks then. Ashwani, what's on your buy and sell list?
The index should possibly head higher. So in that sense, we'll trade with more of positive bias and try to buy it closer to about 10,650, 640 zone.
Let's discuss individual stocks then. Ashwani, what's on your buy and sell list?
Still, I expect a bit of short covering to happen in individual stocks. So Asian Paint is a buy with a stop of 1300, target of 1365. Havel is a buy with a stop of 558, target of 574. Repco Home is a buy with a stop of 600, target of 625. And Maruti has had a good sharp rally. This is a buy with a stop of 8650, target of 8750. And CG Power is a buy with a stop of 74, target of 86.
Okay. Sudarshan, what is on your list? And also, how would you trade L&T this morning? I mean, it's already had a fair bit of a run-up. It went up about 2.5% yesterday. But do you expect some more post-good numbers?
First, the L&T. Yes, L&T has more potential to run up. Whether it does that today, because I expect a choppy market, but some stocks will go up and L&T could. It's on the verge of a significant breakout on the upside. You would actually buy and hold it for a few days. It's a very good stock to be identified for buying. Apart from individual stocks, very quickly on the Nifty Bank. The Nifty Bank is not a short sell. I only spoke about the Nifty. I just wanted to clarify that.
Okay.
Buying is possible in mid caps. There are mid caps that are doing well and just breaking out. United Spirits is one of them. After a nice rally, the stock was in a small trading range and is on the verge of breaking on the upside. This is a stock with upside momentum, so it's a good opportunity to go long today. Similarly, Karnataka Bank surprisingly has been building a base lasting for more than 2.5 months. It's on the verge of coming out of that base. So it's not just an intraday trade, it's also a positional trade. If you are willing, you buy it and hold it for a few days again. And the third is Havells, where a similar rally went into a consolidation, is now on the verge of breaking out and giving us a day trade as well as a positional trade. So there are opportunities on the long side. And two quick short selling ideas: Cummins, which is in a downtrend in a bear market of its own, and Chennai Petro in the same status, a bear market. Here, short selling is possible intraday.
Okay. Well, I can tell you this much. Havells is many people's favorite. Mitesh, you also have some finance company favorites.
Yeah, and I also have Havells on my list.
Yes.
But I'll start with Bank of India. I think, Lata, you were covering the stock in the morning. There's some kind of a gap breakout. The indicator setup has turned positive. So I would want to take a long trade here. Keep the stop below 103.5. Look for targets of 116. Capital First is something which is giving good signals of reversals on the intraday charts. So buy with a very tight stop at 566. Look for a short-term move to about 590 levels. Havells, I think, as Sudarshan also covered the stock, good breakout candlestick pattern there. So buy with a stop below 553. Look for a 585 kind of target. And I also have RBL Bank in my buying list. It was actually a buy on Friday as well, but still showing continuation signals. So now can be bought afresh. Keep a stop at 510. Look for targets of 545 and a solitary sell call in form of Cummins India, where I would recommend selling with a stop at 730.5 for targets close to about 675.
Okay. Mitesh, just to add to the Bank of India, I was speaking to many officials yesterday after the numbers. They have a very strong feeling that they have a good chance of coming out of prompt corrective action. Now remember, this is the bank's employees saying, it's not as if it's got confirmed, but their point is that the government and RBI are uncomfortable with too many big banks in the PCA list. PNB's numbers are much worse than Bank of India because of this one-off that they have, but they have not put them in PCA. So the expectation in the bank is that, considering that their NPAs have fallen, net NPAs by 200 basis points, if there is any bank that has the first chance of getting out, it would be themselves. Remember, this is coming from the bank officials, which is why I didn't put it out as news. That also, I mean, such sentiment could really work in favor of the bank.
Okay, well, let's get back to talking about the strong showing by L&T this quarter. The revenue growth may have missed their own guidance, but on the bottom line, they have reported a better than expected 3,100 crore rupees. And not just that, very strong order inflow and revenue guidance for FY19. Abhineet Anand of SBI Cap Securities joins on the phone line to talk about that. Abhineet, hi, good morning. What did you make of that order inflow guidance of 10 to 12%? You think it's a bit conservative, or do you think, you know, the management could possibly meet that, given that execution has been quite strong?
I think why the 10 to 12% is the fact that in the current year, post 1H, they have over-delivered on their promise. So they were more as a flattish order inflow for the current year, and they have delivered around the 6% mark. So I think over-delivering in FY18 might have led to a 10 to 12% in the inflow for 19. And second is the fact that we are in an election year, so either orders could swing either way from 19 to 20 or something of that sort. So I think 10 to 12 is a decent number.
Okay. Abhineet, any other points that you noticed in the results, say the operating performance execution, which make you confident about the stock?
See, improvement in margin is one thing that the management has been focusing on. Their 5-year plan to increase their ROE is what they are looking for. So I think on the core business, improvement in margin and making the company a more leaner balance sheet for better return ratios in the future is what the management has been focusing. Okay. And I think they are largely online for that.
All right. Abhineet, we've actually run out of time, but thank you so much for stopping by. We need to actually cut across now to the Aurobindo Management Conference call currently underway.
Growth year on year, and for the quarter stands at 3,249 crores, an increase of 13% year on year. API revenues for the year were at 2,962 crores, and for the quarter were at 800 crores, a growth of 5% year on year. In the formulation business, the US market revenue stood at 7,442 crores for the year, an increase of 9% year on year. In dollar terms, US revenues witnessed a growth of 13% year-on-year basis to $1.15 billion. For the quarter, the US revenues witnessed a growth of 5.8% year-on-year at 1,739 crores. In dollar terms, the US revenue grew by 10.1% year-on-year to $271 million. The growth was primarily driven by new product. The growth was primarily driven by new product launches and improved volumes of existing products. We have filed 11 ANDAs and launched 7 products in the quarter under review. We have received final approval for 10 ANDAs during the quarter. Year as a whole, we had received 49 final approvals. Aurobindo USA, the company marketing oral products in USA, has witnessed a growth of 18% year-on-year in FY 17-18. For the quarter, the growth was at 21% year-on-year. Aromatics, the injectable business, clocked a growth of 4% year-on-year to $164 million in FY 17-18. For the quarter, the revenue declined by 16% to $35 million, majorly on the back of product recalls and stoppage of the bag line. We have filed a total of 90 injectable ANDAs as on 31st March 2018, out of which 57 have received approval, including 2 tentative approvals, and the balance 33 are under review. Oro Health, our OTC business in the US, has started picking up with new product launches. The company, as on 31st March 2018, has filed 478 ANDAs on a cumulative basis, out of which 327 have final approval and 34 having tentative approvals, including 11 ANDAs which are tentatively approved under PEP4, and the balance 117 ANDAs are under review.
Okay. Well, there is a lot of hope that these abbreviated new drug launches in the US will one day bring home the bacon, but at the moment it has not fired for investors. We will, of course, have Ekta listen in to the conversation, and she will come back to tell us the key takeaways from the conference call that Aurobindo is having with its analysts. For the moment, it's a short break. We are going to come back with Mehrboob Irani of Ginny Gems Consultants to give us his analysis of some of the big numbers that have just been announced. Plenty of results to discuss, some of the smaller ones as well, but of course, big boy, L&T. And for that, we have Mehrboob Irani, Managing Director and CEO of Ginny Gems Consultants. Good morning, Mehrboob. Always a pleasure having you with us. Well, first up, let's finish the L&T conversation. Do you think you'll buy that stock now after listening to the management sounding very confident of more orders this year?
I would say a one-line answer. I think people who are holding on should continue to hold on, and people who have not bothered to buy into Larsen & Toubro, I think should consider buying. I think what I liked was the management commentary. I think, as always, very candid, very clear that private capex yet to take off in a big way, but government expenditure, I think, is driving the growth. Number 2 is they said if there is any risk to earnings, it's on the high upper side. And what I've always appreciated about L&T's management commentary has been that they have been quite conservative in the past, and this time they sounded a little positive as relative to the last few quarters, which is a clear indication that things are turning up, things are turning positive. And at the present valuation, honestly, I feel that L&T is among the frontline stocks which could be looked at the present volatility in the market. So I would give a proper thumbs up to Larsen & Toubro. I don't know how the stock will react today, because the stock has had a decent run up in the last few days, but still at the end of it all, I feel the stock directionally is poised to go up.
Okay, stock is poised to go up directionally. Well, it has been doing that for a while now, so maybe that could continue. Mehrboob, hi, good morning. I wanted to ask you your view on the United Spirits stock, because the numbers this time were quite good. The volume growth was 15%, and the management is actually guided for positive double-digit growth in FY19 as well. Do you think that, you know, this stock could sort of give decent returns over the next 1 to 2 years?
I think I had only one complaint with United Spirits stock, was that it was, in terms of valuation, quite expensive. What became another deterrent over the last 2-3 quarters is the numbers just never lived up to the analyst expectations. I think on the lower side as compared to the expectations. So the stock has had a little bit of a rocky move over the last few months. But this quarter numbers, honestly, I don't have too much of complaints, especially the volume sales in the premium segment and the segment above that. I feel that the volume sales were good. I believe that earnings, I believe that the valuations are still not very, very cheap in any way. And I would say that the market could possibly be waiting for one more quarter or a couple of more quarters before deciding as to whether this is the level at which they are comfortable with. I'm talking about the valuation level. So I think Larsen & United Spirits as a consumption stock, I would like to go with it. The only concern is if the valuation gets a little bit devalued because of the overall market. So I would say that this is the stock which I would like to add on right now, include it in my portfolio and possibly go on adding on to it as and when the market provides me an opportunity. In short, I feel that this is the stock which investors should look at from the consumption angle.
Okay. Well, with that, let me come to the finance end. The NBFC companies have not been the market's favorites lately, but yesterday, of course, there was a bit of a relief rally in many of these stocks. What do you like after looking at the entire results season? You used to like Edelweiss, right?
I would say Bajaj Finance, Edelweiss has been my favorite. I think Edelweiss has made a great move. I think it's at its all-time high. The point is, do you sell off? Answer is no. I think can the stock correct? I think the overall market, anything can happen in the shorter run. So Edelweiss is the stock I would like to be with. I think the other stocks which look attractive is L&T Finance. Okay. I think this is the stock in which I personally like the business model of the company, and in terms of valuation, I don't have too much of complaints. The third stock which I have always liked is Bajaj Finance. You may question, and I may also now look at the valuations, looking a little bit expensive. But is this a stock in which my comfort level has come down because of valuations? My answer is no. So Edelweiss and Bajaj Finance, two rank outperformers in the NBFC pack. I still continue to like them. And I'm ready to look at possibly something like maybe a Centrum, which I think announced numbers, and I think where the business is slowly spreading into some other segments. So Centrum could be a dark horse in this entire pack of NBFCs. And in terms of valuations, why they are expensive, Bajaj Finance and Edelweiss. With L&T Finance, a stock which I think will sooner or later attract the attention of the market.
Okay, so that's the NBFC space. I want to ask you a couple of more questions on some heavyweight earnings, Mehrboob, but I'll come to you in just a bit. Before that, let's take some F&O cues as well. Chandan Tapari of Motilal Oswal Securities is with us. Chandan, hi, good morning. If you can just quickly run us through what your F&O trades are for the day on individual stocks.
Yeah, first talking about the Nifty, till it holds 10,620, overall positive bias could continue in the market. Talking about the stock specification, we have seen the positive bias in our selective auto counter, and after a long time now, Maruti is taking support at its lower band of the trading channel, which is working well from last 6 months from June, July 2017 onwards. So the positive price pattern and retest of the major support is giving the hope for a positive spurt in the counter. We have seen the positive crossover in the mechanical indicators as well. Short covering with delivery volume is clearly visible in the counter. So recommending to go long on Maruti with a stop loss of 85, and this stock has potential to move towards 8,900, then even 9,050 kind of level. Second trade is buy on Tata Communication. After a long time, this stock has given a consolidation breakout. It has given a breakout above its 50-day exponential moving average and surpasses falling supply trend line with surge in trading volume. We have seen the breakout in indicators as well, and some short covering and put writing activity also indicates the positive stance. So one can buy with a stop loss of 630 for an immediate target towards 666 level. Third trade is buy on SRF. The stock has taken support at its weekly trend line, and it has also negated the formation of lower highs, lower lows. It is turning from its oversold scenario on the daily scale. So that is also giving a scope for short covering rally. So one can buy with a stop loss of 1880 or an up move towards 2035 in next 2-3 trading session. And one more trade, that is the strategy on the Arvind Mill. The stock is taking support at major weekly or the monthly trend line, and the stock is near to the lower band of the trading range, and this range is working well from last 1 year, 1.5 years. So it has come to the lower band of the trading range. So again, there is potential to move towards 420, 430 kind of level slow and steady. So one can trade with bull call spread by buying one lot of 400 call, selling one lot of 420 call. So in the entire strategy, one has to pay the premium of around 6.5, and the reward is near to 13 to 14 rupees. So 1:2 risk reward ratio, and this stock is taking support its major trend line and expecting it to move towards 420, 425 levels.
Okay, Chandan, thanks a lot for joining us. Well, let's talk about some numbers now Auto ancillary Subros has posted a mixed bag. The revenue growth was solid this time, no complaints there, 34%. The margins though have been impacted by higher raw material costs and a couple of other costs as well, the GST impact and aftermarket sales, etc. Employee expenses have also increased this time. Mr. P.K. Duggal, the Vice President Corporate Planning and Marketing at Subros, has joined us now to talk about that. Mr. Duggal, good morning. It's been a good year for you. So FY18, you've ended with a revenue growth of almost 25%. Tell us a little bit about the revenue potential that you have from the supplies to the Suzuki Motors Gujarat, that is the Sanand plant. What kind of revenue potential you're getting from there? And also from the Indian Railway tenders, what kind of potential do you see going ahead?
Yeah, good morning. After a long time that we have satisfactory results in this year. As you mentioned, the growth in Subros exceeding 20% this year. We are very confident that this growth will continue in the subsequent year also. Related to Suzuki Motor Gujarat, we already started supply from our Sanand plant. So currently the capacity which we have in Sanand plant is around 400,000 units. We are getting up capacity in line with Suzuki long-term plan up to 750,000. So this plant can give us an incremental revenue between 300 crores to 400 crores based on how SMG increase their production there.
Okay. Mr. Duggal, I wanted to ask you about the GST impact. You say there was an impact in aftermarket sales. Exactly what is this problem, and is it now sorted out?
Yes, it is now sorted out. Initially, there were some hiccups of regularization under GST regime, and there was some documentation issues with the dealers or the retailers. So, but now it is being sorted out, and hopefully this year it would be better.
Okay, and employee expenses, should we take that as a one-off?
Yeah, this is one-off. There are certain provisions or regrouping in this year. But now it is at a sustainable level, so there will not be any significant change going forward now.
Okay. I also wanted to ask you a little bit about the mandatory air conditioners in trucks that had opened up a couple of months ago. You had seen a lot of revenues coming from there, but just to understand what the growth potential could be in FY19 as well, and who are the key customers that you're supplying to now?
Yes, this regulatory requirement for setting up a blower in each truck of N2, N3 category has started from 1st January 2018. So we have seen 1 quarter impact in this financial, but now it would be 4-quarter impact in the subsequent quarters now. A few OEMs have started giving air conditioning as an option, although the mandatory requirement is blower, but they are offering air condition as an option. So we see some mix of ratio between 30% air conditioning and 70% blowers, but this market definitely maybe after change of BS6 will move towards air conditioning. So we are hopeful that this segment will give substantial revenue to Subros.
Okay, and finally, you're also getting into condensers and radiators for white goods. What is the potential over here? Yeah. How much revenues are you expecting? Will it make a big difference to your overall revenues?
Yes, we to utilize our capacities, we expanded our business into home appliances, that is mainly through condensers. So we already started supply last year to Whirlpool, this year to E-Durable also. So we see a revenue between 70 to 90 crores from this segment going forward, though this industry is more seasonal industry, but definitely these revenues will support Subros financials.
Okay, Mr. Duggal, all the best, and we hope to speak with you once again. That's been one of the big performers this year, actually. In the last 12 months, it's gained about 30%. And as we know, supplies air conditioners, not just to cars, but to trucks and now railways, as well as to some of these white goods makers as well. Let's take a short break on that note. We'll come back with the pre-opening rates and lots more strategies coming up for you.